Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and we're going to go over five top stocks that I like going into the next week. Could be ETFs, but 5 picks going into the trading week. We're also going to talk about a recap of my June 10th call I made on gold and the dollar, in that while gold was dropping and the dollar was rallying, I had concerns about their ability to maintain those trajectories because RSI was sending us a signal, meaning they were diverging. So while the price of the US dollar was going up higher, RSI was going lower. Never, ever good. And it was vice versa for gold. So while we stopped out of our NUGT, the leveraged ETF for the gold miners last week, we eventually got back in because by the end of the week, we were watching the 4-hour chart, RSI still holding up well, despite the fact that NUGT was getting hammered and the US dollar finally began to sell off. So we stepped back in, we bought NUGT back very close to the lows, and we are now long. We ended the week up very strong. I'm going to play for you that video from the 10th because for many of you out there who still do not believe in technical analysis, this is a perfect example how the market sends you signals, meaning if you use the charts, you don't have to worry about the shenanigans that the large institutional players play against you. Is it for real? Do they manipulate the market? Absolutely. There's no doubt about it. However, you can combat them using the charts. We'll talk about that. Also, we're going to talk about my commentary from yesterday. I'm going to play it back for you. The commentary with regard to the Dow Jones Industrial Average and the Stochastics. I mentioned, and this is when the Dow futures were up in the pre-market over 100 points. I said, guess what? I don't think we're going to close at the highs of the day. I think we're going to fade, meaning I didn't think we were going to close down necessarily. I didn't make that call. What I did say is that we would probably fade, meaning close off the highs. And in fact, we had a high intraday of 24,663 on the Dow Jones. And by the end of the close, we closed down 83 points at 24,580. And we were even down lower in the final 15 minutes of trade, down 102 points off the high, hitting a low of 24,561. That's a fade. Yes, we did bounce to close off the lows, but still not good going into the next week because a lot of indicators are out there saying to me on the other charts, the weekly charts, the daily charts, saying, get ready, we could have just put in a top in this market. And I'm going to go over my technical analysis of the week ahead commentary with members tomorrow being Sunday. So if you're not currently a member, sign up, get the 14-day free trial offer, watch it for free. And you can always cancel. Go to the members area in the website, cancel, all right? You don't even need to email me, just cancel it. Also, we're going to go over the GOOS pick that I made on June the 10th, Swing Trading Today. If you're not currently a viewer of Swing Trading Today, make sure if you watch this on YouTube, click that button below, the subscribe button. Give me a like on Facebook. Follow me there. Leave a comment below on any social media that you're watching this on or you found me on. Leave a comment. I will reply back to you and let me know. I'm redesigning the website right now, and prices are going up. You'll be locked in if you join now. I digress. So let me know what you want. What do you want me to talk about? And I'll talk about it. So just leave a comment. Let's talk about how we can make each other better traders. If you have a suggestion for me, I love feedback. If you hate me, leave a comment. Tell me why you hate me. I'll learn from it if it's constructive. Anyway, I digress. Again, let's get to best stock charts for the coming week. I'll see you on the other side.
Let's take a look at the dollar. The dollar, which has been very strong. This bar here, 4-hour bar, opened up only a few minutes ago at 5 a.m. Eastern Standard Time. So it's a fresh bar. We broke out of this pennant formation yesterday after the close. So the path of least resistance remains higher for the US dollar. And here's our upper band of resistance. There's going to come a point, folks, where the dollar is going to come under some pressure. because we need to understand why the dollar is rallying. It's rallying because of the trade war tensions. But two things or both can happen. One, concern with regard to the negative impact of these trade wars on the U.S. economy could filter through to economic data, which is already weak, and earnings data, which would be very disappointing because the market is already very expensive. And what I just pointed out here on this line I just drew is that while we've been moving higher on this 4-hour chart, we've seen a negative move, lower highs on RSI, no breakdown yet to lower lows. One might argue out of here, but no, I'm not going to buy into that. I'll stick with the lower highs. I'm watching for a break on RSI down, because what RSI should be doing right now on this move higher, it should be breaking out with price, but it's not. So early stages here, maybe nothing. The dollar is up this morning, but keep an eye on it. Let's take a look at the price of gold. Gold this morning is down. And here's an interesting factoid in that what we're doing here is that while we're seeing lower lows on gold, you can see now we have this trading channel formed. Let's throw some lines up here, or some colored lines, I should say. Okay, so in blue, we have our very short-term trading channel. And what we're looking at here are higher highs getting put in on RSI while we're putting in lower highs on price. So going back to the dollar, higher highs on price, lower highs on RSI, back to gold, lower highs on price, higher lows on RSI. So what we're seeing is a bit of a divergence, nothing to trade off of, folks. I would not go jumping in saying I'm getting long of gold because of what Bob just pointed out on the 4-hour chart. It means nothing yet until we begin to see serious breakouts to higher highs in RSI on gold and lower lows on the dollar, and then eventually you want to see price follow through respectively on both charts. So folks, that was from Swing Trading Today from June the 20th. I'll link to it at the end of this video if you want to go check it out, or it's posted on the website, thecontrariantrader.com, on the vlog. So here was the 19th right here. And you could see that we continued after my commentary to continue to trend down, with the one exception was right here on the 21st, where we had a breakout on both price and on RSI, but it failed. It couldn't hold its mud. That breakout failed, and then we collapsed with both RSI and price breaking down. And the inverse happened on gold, where we continued to see lower lows, a lot of pressure on price, and eventually RSI succumbed, but then it rebounded. This was capitulation selling, and we got involved with NUGT right down here because it became truly unsustainable, the pressure on the shares. You could see right here on Wednesday, we went into extreme nosebleed territory on our RSI, and the shares closed up strong on Friday. So this should illustrate to you the value of learning how to use your indicators. RSI, Stochastics being two of my favorite. And while divergences in the early stages don't necessarily mean that you're going to be correct in your trade, it certainly gives you something to think about and to watch, because it worked out for us in that we were able to get long of NUGT at very low prices because I was able to identify that the dollar was getting weak. And that's the value of understanding inverse relationships. When the dollar is weak, the value of gold will tend to rise. And when the dollar is strong, the value of gold tends to go down. It's just the way it is because gold is priced in US dollars. So I don't want to beat a dead horse on this topic. RSI really helped us out here. If you want more commentary with regard to my observations on RSI versus price, subscribe to my channel on YouTube or enter your email address on the website or do both. Let's move on to the SPXS, which is a trade that we booked profits in last week. As I mentioned earlier in my opening comments, the Dow Jones Industrial Average did close up on Friday, okay? We need to give credit where credit is due, but as I always like to say, all up days are not created equal. And how I knew that the Dow Jones would probably fade at the end of the day was by the virtue of the fact that we had Stokes trading down below the 50 level. In fact, let's play for you the commentary I made in the pre-market on Friday morning when the Dow futures were up 111 points. The Dow Jones, horrible. Absolutely horrible. We're up triple digits this morning, but we have the Stochastics, which are, both lines are trading down below the 50 level. And as I always teach members, when you have both lines on Stokes trading down below 50, rallies tend to fade. So I'm willing to bet that this rally today is going to fade. And we'll probably pull back and retest this lower band of support. If it holds and then we rally back, okay, then it's probably all good. We'll probably continue higher. If we fail and we take out the lows of the 21st, it's going to get ugly, folks. So be careful. All right, so why is it the fact that Stokes were trading down below the 50 level led me to believe that this rally would fade? Well, the stochastics are a momentum indicator, right? There are no guarantees that just simply by virtue of the fact that the Stokes are trading down below the 50 level that the rally would fade, just probabilities. So knowing that the probability was that the rally would fade, I would not go chasing any rally on Friday, and we did not. So this is the value of understanding that when stochastics are weak, stocks tend to have rallies that fade. Let's take a look at the intraday price action. Let's go to a 15-minute chart. Now here was the peak, 2 o'clock in the afternoon, and then by the closing bell, we had dropped down by 83 points, and we were even lower by 102 points earlier, but then we bounced off the lows of the day on volume, folks. Big volume into the close. You don't want to see this. This is not good for Monday. So just a quick lesson with regard to stochastics. Now, last week, we booked profits in our short of the SPXS. We saw on a daily basis that we were bottoming. We were holding support. That support level was where there was prior resistance back in January. Then, while I was using a 1-hour chart, I saw this bullish reversal bar on the 18th, and I said, you know what, let's pull the trigger here. We had a nice consolidation. We're putting in higher lows and higher highs. The trend appeared to have changed some. So we pulled the trigger, and honestly, by the end of the day, I was sorry that we opened up the trade, because when you take a look at the daily chart, we were putting in hollow-filled candlesticks. And what that means, that's a sign of indecision. And as I mentioned earlier, all up days are not created equal. Ideally, when you have an up day, you close at or near the highs of the day. That means that you had buyers into the close, not sellers, but buyers. That's accumulation. Now, when you get hollow-filled candlesticks, that means you closed off the highs of the day, and that means you had some overhead supply, meaning buyers back here, they wanted their money back, or you simply had guys like me in there speculating and booking profits. So we booked profits quickly. I'm not going to go into how much I made. It doesn't matter. What matters is that you entered the trade for the right reasons. And if you didn't enter the trade for the right reasons and you had concerns about the rationale of as to why you opened up your trade, well, you book profits and you move to the sidelines. Or if you take a loss, you take a small loss and you move on. In this case, we booked a profit and now we're looking to reopen. Would I buy SPXS on Monday? No. I mean, there's no reason to. We don't have a breakout yet. It's in the middle of a trading range. It's a triangle formation. Here's your upper band here, and here's your lower band of support. Actually, a pennant formation. Either way, it's a consolidation range. It's a trading range. You don't buy it here. You buy the breakout. So we're looking to get long of SPXS. Not right now. Stokes are beginning to break out. You have the fast line above 50. Good stuff. RSI still can't get above 50. So it's not ready to be bought for the longer term yet. We move on. But we watch it. Now, I'm going to go into a couple of extreme overbought stocks that we're looking to short in the coming week. Now, I mentioned on Swing Trading Today, which again is going to be linked at the end of this video, I mentioned that GOS right here was at extreme nosebleed levels. It would not stay there. It would sell off. I made my commentary in the pre-market on the 20th. On that very day, we put in a new daily high, but then we flashed a bearish key reversal. Why did that happen? It happened because we had RSI above 93, and we were trading at the 3 standard deviation Bollinger Band where it's not supposed to be. And by the end of the week, we closed down by 5.5%. Would I go buying it? No. Here's why. Taking a look at a weekly chart, you can see that we flashed a bearish key reversal. And that means that in all probability, we're going to make lower lows. We'll probably trade down to the mid-50s, and then we'll revisit it. It's a good stock. I'm not predicting that it's going to collapse, but in all probability, it is going to make lower lows. But for those who shorted, and that includes my members who shorted, I know 2 of them who did. So you need to book profits, all right? The easy money's been made. Strong stocks tend to get stronger. We were bullish on it back here. I said that it would probably rally, and it did. If you bought back here, which I know a bunch of you did, and you're still holding on to this thing and you haven't booked profits yet, come on, think about it, all right? Now, new trades that we're looking to put on for the coming week to the short side that are extreme overbought stocks, exactly like GOS. The first is Domino's Pizza. You heard it. I have been bullish. I know. I've been very, very bullish on Domino's Pizza. I was bullish back here on the breakout. I was bullish back here on this breakout. A bunch of you are long. Folks, it's time to book profits and head to the exit door. Why? Take a look at the daily chart. RSI at 85.56. Can it go higher? Sure. What we're seeing here are signs of topping action. Indecision bars, meaning hollow-filled candlestick on the 20th. On the 21st, we closed higher, but we closed off the highs of the day. On the 22nd, we closed higher, but we closed off the highs of the day. That's profit taking. Now, does that mean on Monday morning, DPZ can't bolt higher? It certainly can do so. I'm not saying to go shorting it on Monday morning. Nothing of this sort. We're going to talk with members tomorrow on the week ahead commentary about how we plan on shorting Domino's Pizza. So if you're not currently a member, sign up for the 14-day free trial offer. You can always cancel. You get that commentary. Kroger, another stock where I have been very bullish on for several months now. Now, you can go to the website, do a search in the vlog, and type in KR, and you'll get my previous commentary on Kroger. And you'll realize that I was very bullish some time ago on Kroger. And you could see that since that point in time, it has rallied dramatically. And right now, it's time to press the eject button because we have RSI on a defensive name, 85.23. We're trading above the 3 standard deviation Bollinger Band. Again, I'll save you the technical jargon of what that means. In short, it means get out. We're not supposed to be here. Book your profits. Get back in at a lower price. Volume is still good. We may make another higher high. I would sell that rally. The next chart up, we're looking to buy Uranium Energy Corp. I love this chart. We are in a long-term consolidation. Last week we flashed a bullish key reversal, meaning we were down on the week. We reversed to close higher. That is sexy stuff. What I'm looking for now is a rally up and above this upper band of resistance. We will look to get long. Now, the reason why I have this line back here is to illustrate something, and that is the value of technical analysis. And the observation that you can make here, and you see this time and time again, is that on a breakout, as we did right here, the week of April the 9th, we had a continuation breakout the following week, the week of April the 16th. The next week, the week of April the 23rd, we pulled back, retested support. And what does that mean? What that means is that you have to understand the mind of traders. We are OCD, obsessive compulsive disorder. We need to touch things and realize that, you know what, it's for real. And we had this as a resistance level for a long time. So when we broke out and above it, we had to say to ourselves, you know, maybe this isn't for real. Maybe it's just a short squeeze and it's going to fail. Well, this pullback and the fact that we rallied off of what was a resistance level was now support, that was validation of a breakout. So now traders become emboldened to put on larger positions. And this is where we are right now, me talking about it, others probably talking about it. They won't talk about it with you as I will, but they will talk about it in the boardrooms and in the institutional chat rooms. But I'm telling you right now, they're going to take this sucker higher. So more to come, members, on our entry point for UEC. MDU Resources weekly chart. I've spoken about this one several times. We've been very bullish on it. It's been volatile. We have broken out. We have a beautiful cup with handle formation. We're very close to a breakout here. So members, we'll be talking tomorrow about an entry point for MDU Resources on the week ahead commentary. Again, if you're not a member, sign up, 14 days free. Verizon, weekly chart of Verizon. I know I went more than 5 here, but I believe in providing value, and I love doing this stuff. So I think this is our 6th pick, whatever, who's counting. A bullish key reversal last week. We're in a tightening triangle formation on not just price, but on RSI, very close to a breakout. Stokes are moving higher. I think Verizon is going to break out. So members, more to come here. This is probably going to be a more longer-term investment rather than simply a swing trade. Volume last week was very good. Verizon, outstanding. Marathon Oil. We'll make this our last chart. Marathon Oil, weekly chart. We are setting up what you call a continuation breakout pattern, which I like to call a bull flag formation. You could see that we're putting in higher lows and higher highs on Marathon Oil. The sector looks good, which is very positive for the stock. I think we're going to break out probably next week. Stokes, in all probability, are going to hook back up. Now, many of you out there reading Technical Analysis for Dummies, you're thinking about the Stokes. And Technical Analysis for Dummies says that when the Stokes are above 80, that you should short a stock. Folks, if you use that rule of thumb, you're going to go broke. Stochastics above 80 can stay above 80, much as what they did back here, much of 2014. And think about if you shorted right here, Marathon Oil had Stokes above 80 as of, let's say, April through their final breakdown here in September. Think about that. The world of hurt you would have been in shorting Marathon. So please don't go shorting Marathon Oil because Stokes are above 80. It's a sign of strength. It's a sign of demand. We are breaking out here. Think long, not short of Marathon Oil. And that's it for this week, folks. If you're not currently a member, sign up for the 14-day free trial offer. If you're not ready yet, that's fine. Subscribe to my YouTube channel. If you're watching this on the website, enter your email address. We hate spam too. You'll not be spammed. Leave a comment. Wherever you're watching this, I'll get back to you. Everybody have a really enjoyable weekend and have a very profitable week next week. And more importantly, have a healthy one.